and they crossed up. That means nothing to me. Okay, it means absolutely nothing. What I like is when they start to angle up or angle down, for that matter, like they did here, okay? When they start to take an angle and they start to widen apart. This section here is wider than this section here. This section here is wider than this section here. So visually, they start to angle up and they start to widen. That has now created, for me, what we call a rotation zone. Now, what is a rotation zone? Well, it's an area where when the market goes into it, it often rotates back in the original direction. All right, so what do I do with that? Well, when the zone forms, one of the other ways that you can see that a rotation zone is forming is there starts to be a situation where we call 8 pushing the price. So we get the forming of the rotation zone about here, and then the low is near the 8, and the low is near the 8. And here it's nowhere near the 8, but here the low is near the 8, and the low is near the 8. We call that 8 pushing the price. It's happening up here again, right? Where the market doesn't even want to go into and touch the 8. If it touches the 8, it ends up being support. I don't do anything with that either, okay? What I do is the first time that the market enters the rotation zone, I look for an opportunity to go long. Now, this is what I'm talking about, of preemptively taking a trade. I don't go long when it goes in there, okay? Because if you saw this and you entered here, yeah, there was a pop here, but this wasn't a rotation zone, okay? Here we got a market that goes into a very respectable rotation zone and collapses below it, okay? So I don't enter when it goes in the rotation zone. I enter when it goes in and then breaks out back above. So what I do is I draw a best fit trend line. What do I mean by a best fit trend line? I draw a generalized trend line here. Okay, so as soon as it goes into the rotation zone, I look for a place to draw a trend line. And again, I'm calling it a best fit because I just kind of want it to be a trend line. It doesn't have to be perfect. Okay, try your best to include a lot of the points in there. You could have gone from this high to this high if you wanted, right? I kind of like it better the other way. I like to go from closes for this particular pattern. When I draw actual trend lines that I may trade off of, what we call trade trend lines, I use the highs. But for these kind of periods, I like to use the close. All right, so once I've drawn this trend line, and the trend line is in the opposite direction of the trend that the stock has been going in, okay? I then look for a close above the trend line. That happened here on February 21st, okay? Now, I only know the close once it's closed, and I don't take trades or exit trades in the pre or post market. So I buy the open the next day. Now, I haven't bought yet. I see the close and I haven't bought the next day. Do you know why? Does anyone know why? What's the risk on the trade? I mean, I'm not going to buy it unless I know where my risk is, right? What is the price where this trade now starts to act like this one did, where it collapses right here, right? Or right here where it collapses through. Where's that going to be wrong? Well, obviously it's going to be below the rotation zone, right? But for me, that's not enough because a lot of the times it can just collapse below the rotation and rotate up. I can't eliminate every time that I'm going to have false signals.